Have you ever thought about how you can consistently invest and trade in the best stocks, ETFs and currencies? In this video, I delve into the world of relative strength trading, a way of always being on the right side of the market, always investing in the strongest and the best performers. I've tested hundreds of trading strategies and I've got some great results to share with you in this video. Let's get started. What is relative strength trading and investing? Relative strength trading is a momentum-based strategy focused on investing in assets and sectors that have outperformed relative to their peers. The goal is to identify and capitalize on market trends by riding the winners and cutting and avoiding the losers. Why do we use relative strength trading and investing? Relative strength trading is a systematic, data-driven approach. We want to generate consistent returns, we want to outperform passive investments, and we want to avoid large drawdowns. How can you use relative strength trading and investing? I'm using the S&P 500 sector ETFs because they're large, they're liquid, they're easy to trade and they're low cost. But you can use any asset you like, any range of indexes, different sectors, different commodities, different forex pairs will all work for sector relative strength. For this analysis, I have chosen the 9 biggest, most liquid and most widely held of the sector ETFs. What are the S&P 500 sector ETFs? These are exchange-traded funds that track the performance of sectors within the S&P 500. They are widely held and widely discussed as a way of making a fundamental bet on the future direction of the economy. As such, they are subject to cyclical and secular trends, which make them a great opportunity for relative strength trading and investing. I did this analysis using a trade-informed Excel backtest model, which you can use to analyze and backtest your own trading strategies. In fact, with Trade-Informed membership, I do the hard work for you. I analyze and test a strategy every month. I highlight what I think are the best results, and you can download and use the model afterwards. Let's have a look at the assumptions and settings that I have used in this sector relative strength model. I have used 9 ETFs, I have used 22 years worth of data going back to the year 2000. I have used data on the daily time frame, and I have used adjusted data to account for splits and dividends. This is a list of the 9 ETFs that I have chosen, the most liquid and the most easily tradable and the largest sector ETFs. For the entry system, I have calculated relative strength based on a percentage, and I've made this variable. So if you use this model, you can adjust it. If you want to have short-term swing trades, you can use a setting such as 20 days. If you want to have much larger positional style trades, you can use 120 or 150 days for your look back period. I have measured each of the ETFs in order, and our entry system is based on when an ETF gets stronger. In other words, it increases its position relative to the group. Now I want to give you some real usable data. I want to dive down to some of the key scenarios that I investigated. First of all, in terms of overall gross profitability, if this is your target, the best that I found was going from the very weakest. In other words, 9, the 9th of 9 weakest ETFs to an 8 or above showed the largest overall gross profitability. You can see on the screen here that we have an overall gross profitability of something like 4 times the original investment, but combined with that, we also have a large drawdown, 2008, 2009 financial crisis, and again in the COVID crash in 2020. We can adjust that in my next scenario, and this time we are combining it with the 200 period EMA. And how this works is the scenario is exactly the same as the previous, except we will not buy an individual ETF if it is not above its own 200 period EMA. Next, I wanted to model a scenario where an ETF, a sector, is strong and getting stronger. So I've chosen the level 3, in other words, the third strongest sector or above. And when our ETF moves to at least a third strongest, then we buy it and we sell it when it becomes weaker than the 6th. So this is a slightly different scenario. You can see here we do have some larger drawdowns. You can see here financial crisis, in particular 2008, and a smaller dip in 2020 when we had the COVID crash. On the whole, we're sticking quite close to the linear regression, which is a good sign. It makes the scenario, makes the strategy easier to follow when we have smaller drawdowns and sometimes when we have smaller increases in capital as well. So I've modified this in the next scenario. It looks very similar. In this scenario, I'm using an EMA on the individual ETFs, and I'm only buying when the ETF is above the 200 period ETF. You can see here in terms of overall profitability, it's almost identical, but we are sticking closer to the linear regression and we're having less drawdown. Now I want to shake things up again. I'm going to look at a shorter look-back period. In other words, we can expect more changes. You would have to be more active in this scenario, but we want to be quicker on the newer trends. You can see here I've used the scenario of greater than 3 with a 30 look-back period. We do have some drawdowns, so we are getting sucked into some of these bigger drawdowns. However, for the most part, we are sticking quite nicely with the straight line, which is the linear regression. Sticking to the linear regression is generally lower drawdowns, generally easier to follow. Less moves, significant moves to the upside or the downside. Makes it easier for us. Now looking at exactly the same scenario, but again, I'm combining it with the EMA, the 200 period EMA. Now this showed the lowest overall profitability, but it still has things to commend it. We are going very close to the linear regression here, so it is easy to follow. I hope you've enjoyed this video on relative strength strategies. If you have, please hit the like button. If you would like more content like this, please subscribe to this channel. And if you'd like more information about trading the financial markets, about backtesting, about understanding your trading strategies, please go to TradeInformed.com.